Good evening, everybody. Welcome to the Locke and Your Success weekly trade and market update for March 3rd, 2013. Very excited to see spring coming. It's within our sights, and I am ready for it. Before we get going, we need to remind you that any information contained in this presentation is for educational purposes only. We are not broker-dealers, we are not financial advisors, and we do not make specific trade recommendations. Any trades or results covered in this presentation may be live or they may not be live, so just be aware of that. And if something is not live, any hypothetical computer simulated trade performance results are believed to be accurately presented. They are done real time. However, the actual execution price may have been slightly different from what is there. I am aware, however, if we do a hypothetical trade, what the actual market prices are at the time, and I will match them as close as possible to what I believe we could have gotten filled at. Okay, so the risk of loss in trading options can be substantial, and you must be aware and consider all relevant risks prior to placing any trades. Please make sure you understand the characteristics and risks of standardized options prior to placing any trades. Please be sure to visit our trading blog at lockeandyoursuccess.com and see all the fine things we have there. Also, the Rock trading system, which was supposed to be out in February, it is completed. We're just waiting for final editing, and it will be out this month for sure. And as a matter of fact, you can buy the slide presentation part of the system right now and get the video as soon as it's ready. It's just they're having a little bit of trouble with editing, but that should be taken care of with probably this week or early next week, and at which time you can get the whole system with the videos and everything. Also, we have a bit of change in our schedule. I was scheduled to do the Checkmate trading system next. However, I'm going to go ahead with what's called an SSS trading system or trading series for June, and that'll be fun. It's a bunch of different types of spread trades, and they're really simple and very effective. Also, we got the Checkmate trading system coming out, which is going to be using the M3 Bearish Butterfly and Rock trades combined with technicals to maximize your performance, and that is slated for this fall. And we have a lot of other neat programs we're going to be coming out with also, but these are the three that are next. And you can check all these offers out at lockeandyoursuccess.com. Also, our video programs, if you want to go directly there, we have bearishbutterfly.com and m3options.com for those systems. And be sure to check out the options drive as well. So a lot of great things going on there. Okay, let's take a look at the markets. I'd actually like to look at the Russell first today. As we were saying last week, that the Russell was acting technically perfect. It's just really textbook moves here, and that continued last week. Early in the week, we had this nice push down right into our trend line, and it reversed right here. Completely what we expected. We're seeing our volatility widen out, which is technically bearish. However, as I stated, I think we're kind of pushing into a sideways trend. That's pretty much what we got all week. We got pretty much a close where we started for the week. If we go to a weekly bar, there's not a whole lot of change here. You can't get a whole lot more sideways than that. So where do we go from here? I would expect this to continue some sideways movement for another week or so. We do have the Dow that's trying to reach new highs, and I think we got within, 80 or 100 points of all-time highs in the Dow. I would think that before the market comes down too far, that that the Dow is going to want to be pushing up into this 14.2 area, right up in here. I thought we were going for it on Thursday, but we quickly backed down, and I firmly believe that short-term traders are going to do absolutely everything they can to push this to 14.2 before they kind of give up and the overall market dynamics take over and the market comes down any harder, or at least pushes into a sideways trend in the Dow as well. Now that push could push the Russell a little bit higher. It could push the NDX a little bit higher, which would still be in its sideways range. Even the Russell here is still in its sideways range, but pushes a little bit higher. And as far as the XPX goes, this has pushed into a sideways range as well. A little bit higher this week for the close, but this is pretty much completely expected. I think we're too far from the 15.8 here, 1580 or all-time highs, to test those this time. I think you're going to see the Dow test its all-time highs. I think we're going to see the market back down, or at least run sideways for a while before we start pushing up higher. I really think we're going to actually back down a little bit though, and then it'll be the SPX's turn later on in the year to push all-time highs, and that's when Russell's going to be pushing over 1,000. So that's what I'm thinking for the markets. Sideways for now, maybe widening our range a little bit. If you look at the Russell, I'm still thinking we may close the month right here at the maybe 895 level, or maybe slightly under 900. So as we push into, as the Dow pushes into the 14.2 area, you may see this climb a touch higher, or it may just remain sideways. It should be relatively weak compared to the Dow, and we'll probably more than likely go into a flat sideways trend and end up right in here for our expiration. Let's take a look at our trades. Okay, the first thing we have going on here is the bearish butterfly for March. This has been pretty maintenance free. We had a little bit of jockeying around early in the month, but from there we've really done nothing to this thing since the 21st of February. We've just been sitting in this position, and we're actually up close to our low profit target. If the market behaves this week, it's most certainly going to be over the low profit target. I may go for a little bit more since I am expecting a sideways market, and really we're only maybe half scaled into this thing. We got plenty of ammo here to move to deal with some sort of a market move. It's looking really nice, so should be a good trade for the month, as we thought when we entered it. So got a little bit choppy, but it's good. As far as the April bearish butterfly, really not much to mention here either. We basically put this trade on and have done absolutely nothing. If you want to take a look at, this is a T-log, it's just a trade entry. We haven't been able to get scaled in. We haven't had to make any delta moves, haven't done anything. Here is what we look like right here. So we shall see how things go as time goes on. But I really like the April trade. Let's take a look at the March M3 trade. This has gotten kicked around a little bit this month. However, we're still fairly close to break even. We're down a little over 1% here. And this doesn't like the low volatility environment, particularly doesn't like the low volatility environment pushing into a higher volatility near expiration. It gets kind of tight, and you got to get kicked back and forth a little bit when that tends to happen. If you take a look at our T-log, just a quick review here. On Monday, I sold an 890 call to cut back on our downside risk. On Tuesday, I rolled the 5 of the 890 butterflies back to 870, and then I bought back our 890 call that was sold on Monday to straighten the position out. And then on Thursday, I bought 5 870, 890 verticals, which seemed to be the wrong thing to do because I bought them pretty much at the high of the market, and the market backed off. And then on Friday morning, when we gapped down, this was looking like I was going to have to adjust down again for a little while. But of course, as we all know, the market recovered, and I was able to hold it where we were. And that brings us to where we are right now. If you take a look on the analyzed graph, we're looking good. All we need here is the market to settle into a range and not come down too hard for the next couple of days. Actually, if you put this in here on Monday, since this is March 1st, if we go T plus 4, and take a look at this, theoretically by Monday, afternoon, we should be able to take a move down here at 895 without too much trouble. So this is looking pretty nice. The market may try to outrun us to the upside this time. Also, we'll see what happens. If it does, we'll need to decide if we want to jump on the market, which has been very beneficial the last couple of months. The students who've had basically jumped on top of the price toward the end of the month have been making decent money for the last few months. For us guys who've been taking the approach that we don't want to take on the risk to do that, then we've been paying for that with break-evens or maybe small losses or small gains. So that's the trade here. I can go into BackTrader just to show you what this looked like on Monday prior to any moves. Let's see, that would have been, all right, yeah, so we did this right at the end of the day. So before the end of the day, If we take a look at this, you can see we are pushing. I mean, there's really no big problem with it here. I think the market pushed down a little bit towards the end of the day, a little bit more than this, which is why I waited for so long. I think I was positive 50s about what we want to withstand for delta into the close here. And I think I was down to 100 or so. So what I wanted to end up doing is just coming in here, and I sold one of these 890 calls. There were 10 of them there before. I sold one of these. Took out some downside risk, put us more delta neutral. Went in over the overnight exactly at minus 50. So that's what we were looking at there. We're down almost 5% here. So that's a lot for this trade. It doesn't usually get that far, but a lot of it was just volatility. And that's one of the things you got to get used to. You get a volatility rise, it hurts. So that's what we were looking like there. On Tuesday, all right, so yeah, around midday, it looks like we started rolling these things back. So if you go till noontime on Tuesday, right, we're running high delta again, and we are getting concerned if this continues and runs down hard that we're going to have a problem. So went ahead and rolled half of these back to 870, and we did them a few at a time. Let's see, we were done by. We started earlier in the day. We weren't done till, let's see, about 1:15 here. So we go to 1:30. And you see our delta's cut back to 837. We have our 10 calls back here. I bought this 890 back, and we rolled half of these back to 870. Gives us a look like this, widens us out quite nicely. And on Thursday, what we did here is, okay, it's towards the end of the day, or 2 o'clock. We'll go before 2 o'clock here before we do anything. The market's starting to push to the upside, starting to take on some upside risk here. Did I have to do anything? No, not really. We were within specifications for the trade, but with the way the market's been pushing up and been bullish, I'm kind of trying to keep my delta down around minus 50, so I came in here and I end up with 5 long here at 870, 5 long at 890, 5 short at 910, 3 short at 920. Cuts my delta to minus 24. And this is what we were looking at 2:30 on Thursday, which looked really good if the market was going to continue up. But by the end of the day, the market started to back down pretty good. And we were kind of flat delta here. Volatility started picking up again, depressed our profit and loss a little bit. Of course, in the morning on Friday, we did push back a little bit. We had that for a pretty big gap down, and pushed down into here. Not enough to make us roll back, but enough to get us a little bit concerned. But of course, we took off again, and now we're sitting, as of right near the end of the day. This trade was sitting quite nicely here with the close at around 912 or 913. So that's the M3. Let's take a look at the Rock trade from March. We can go back to our position on Monday. And if you remember, we had butterflies initially at 900 and butterflies at 950. I'm sorry, we had butterflies at 910 and 950. The rollback forced us to roll back and widen ourselves out a little bit in preparation for a further down move. And we did not get that further down move. The market kind of flatlined, or actually did the worst thing it can do when you're in this positioning, which is basically to creep up. So from here, what we did is we just kind of sat in this position until Wednesday. And on Wednesday, if you take a look at what we did, is we started buying, which is one of the things we do here. We start buying our butterflies up at the 930 level, so that we have butterflies at 890, we have butterflies at 930 to pick this line up, and then we still have some butterflies up here at 950. And as we start buying in here, because we need to buy in as we're getting close to expiration to raise our expiration line. As we buy in to raise our expiration line, sometimes our delta becomes too positive. So if you buy in here and your delta gets too positive, you sell out of the top. And that's basically what we did here. So we came in here on Wednesday and we made this adjustment where we bought a bunch of 930 butterflies and we sold off some 950s. And to be exact, we completely filled in the 930s. We filled the 930s to 10 butterflies, and then we had to cut our delta back down to negative again, so we sold off some of the 950s. End of day on Wednesday, we end up in a position that looks like this. Okay, so what we did is we came in here, we bought 10 of these at 930, and then we sold off what we had extra here, and now we're right back in the middle of our graph again. The position is, at that point was down about 1200 again, which isn't big for this position because we have a $10,000 profit target. So, and the only way we were going to hit it would be to correct ourselves because you saw what our expiration line looked like before, so that wasn't going to work for us. So what we did is we come in here and we do this. So now we have 10 butterflies at 890, we have 10 at 930, we have 4 at 950. This is what our analyzed graph looks like, and there was no other adjustments needed on this thing all the way till Friday, or all the way till now. There was no other adjustments at all. And the position is now pretty much a break even, up $89. And we're sitting perfect right in the middle. We're not going to hit the profit target on this month. We should do well. We should do maybe half profit target or something, but we shouldn't be hit. I don't think we'll be hitting anywhere near profit target unless something happens that I don't expect to happen, which would be if we tend to creep up. If we creep up into here, then we will hit our 10,000 because as we add into this side, it's going to pick up the whole thing. If we creep back down, we'll probably be taking like half profit target, which isn't bad. It was one of those months where you kind of get caught in the doldrums on the trade, and this happens, but it's not a big deal. Should still be a good month for us. So that is the rock trade for March. Also, let's see, we have two other trades going on, right? We have a V. Oh, let's take a look. We went over that. Okay. So we have V Condor for March, and that's sitting here. It's sitting up about $3,700, doing quite nicely. The trade looks like this. Haven't had a whole, let me back out a little bit. Haven't had a whole lot of adjustments to this. But what I have been doing, since the market stalled, I have been rolling my short up to prop up my expiration line just so that we can kind of not drop down into the V and lose money. So what I did, so to do that, we just take our calls and roll them forward. And if we take a look at our T-log, what we got here is we sold the 900 March call, bought a 920 March call. That's the only adjustment we did for the week. And all that did is that locked in our profits here. And more than likely, we're going to take about a $3,000 gain on this for the month. We'd have to have a really, really hard up move to have any kind of a problem to the upside. Really, really hard down move to have any kind of a problem to the downside. So I would anticipate about a $3,000 gain in this month. I might let it play out a little bit. If we do creep up here, just like the rock trade, this will be a very, very good trade because we may actually hit our profit target of $5,000 if that happens. I'm not expecting it though. So that's what that looks like. And if we take a look at the V Condor for April, this trade is actually down a little bit of money, but in no trouble whatsoever. I made a similar adjustment to this one. If you look earlier in the week, say on Monday, you will notice in our graph that we have the deep V here. Now, one of the things about this trade is that if the market's going to stay in the middle range here, you're never going to make any, well, you may make money, but it's going to be difficult to make too much money because this straddle in here really kicks the heck out of your theta numbers. So what I started to do is I started to open it up and raise our expiration line a little bit. You can see here the expiration line kind of bottoms out at only a $1,200 profit. I want to take more than that. And since I'm expecting a sideways market and I'm not expecting it to go anywhere, then I'm going to slowly start moving the straddle apart. And I took the straddle from 920 up to 940 on the end of the week. I actually did that on Thursday, the same day I did the other one. because like I said, it looked like the market was settling in here. And if you go all the way to Friday, here is what this position actually looks like. You can see the call is up here at the 940 level now. You can see our V here is bottomed out. Instead of 1200 at 2000. We'll give it a little bit more time, see if it moves one way or the other. If it doesn't, I will gradually widen the straddle out and bring the expiration line up so that we can make a little bit of money. If we stay flat, we'll probably be in a 3000 range. If we roll down a little bit, we may end up hitting a profit target, or if we get a significant move up, we may end up hitting a profit target. Otherwise, this is probably just going to be like a $3,000 month for this. Of course, if we get a really, really hard down move, this trade loses. That's just the way that it is. So it's looking fine so far. Not the best conditions for this. We'd like to see a trending up market for it to work better, but all is good. All right, that is all of our trades that are open. We have another 2 weeks in our March trades. Not expecting a whole lot to happen, so they should work out fine. But we will see how they go. Anyway, that's my thoughts for the week, and those are the positions. We're expecting a sideways market, and I will keep you updated with any changes. Thank you, and have an awesome week. Good night.